late late.
Only one. Only two.
Ọ̀rọ̀ mi sì tiẹ̀ kò lè gbẹ́yìn àti ọmọ ìlú kan lánàá. Ìrìn yẹn kéré. Ibẹ̀ yẹn gan fẹ́ sẹ́kọ̀ndì kan ló wà ní ìgbàlẹ̀.
Àlọ́ wọn tó tẹ̀lé ẹgbẹ́ pọ̀.
Una trabaccem a causa
Ah, ele é o
e a gente não só de 1 million, né? Intervention and achievement. Only 2.5. Road trip to me, Talon, Nano, Ray of Church tí mo tún wò àmì ibi tá a rí health ní ṣe ìjọba wọn lò ìyẹn náà tí ìjọba àgbélé so gbogbo yẹn gan ni wọ́n ti ṣe ọ̀tá àti ìròpé ká ní ó ti yẹ wà wọ̀ lọ́sẹ̀ second tó wà a máa sanwó lánàá lórí ẹ̀kọ́ àbẹ́tún lọ́bìnrin ọkọ̀ tó ń sọ níbi tó lì lọ wọ́n mú nínú ọ̀fẹ́ ìdí àti so àṣà máa jẹ́ kọ́mọ̀ ní December ṣá. Ẹgbẹ́ ẹgbẹ́ ẹ fásitì ní wọ́n sì fẹ́ sọ̀rọ̀ lórí subscription. Ọ̀bí àwọn òṣìṣẹ́ wọn rẹ̀.
Okay, okay.
Ṣé wọ́n torí ọdún fẹ́ ká ló sọ pé Màmá ètò ìgbà
Ọ̀rẹ́ sáàdì link yẹn sí.
àwọn àgbọ̀ ẹgbẹ́ fún ẹgbẹ́ máa ṣẹlẹ̀. Ẹ máa wo lẹ̀ o. Ẹ káàárọ̀ sà. Ẹ lẹ́ sà. Ilé ń lọ sà. Ẹ lẹ́ sà. Ẹ lẹ́ sà. So
Wọ́n ní sà. Mo ṣẹlẹ̀ sí nílé.
mi ò rí. Ó yà ẹ̀sẹ̀ ó ṣẹlẹ̀ sí GS means live streaming. Ọ̀sẹ̀ lè yan máa ju 500 lọ. Máa láti wàá wò pé at what point ni ìgbà sẹ́yìn náà. Ó máa ju 500 lọ. Àwọn tó rẹ́jísítà ti wọ 1,000. Àtàtàmọ̀ 9 something. Ọlọ́ọ̀fẹ́ ìgbà tó ti jọ́ ọ̀fẹ́ ẹlòmíì bá jọ mo dẹ̀ ti sẹ́ẹ̀rì máa ṣé o sẹ́ẹ̀rì máa dà sí ó sẹ́lẹ̀ ẹ má sẹ́lẹ̀ láàárọ̀ alẹ́ àná ètò abẹ́rẹ́ ìlú máa dára mo sẹ́lẹ̀ lálẹ́ àná má ràn wọ́n létí ìgbà
Àwọn nínú ìsìn.
tó bá yẹ kí tèmi ó wà understandable. Nice. Wow, you already free credit. Oh, I need register. Oh, kí ẹ fà á lọ́dọ̀ ẹgbẹ́ tọ́pìkì. Ó wà ìkàjì. Mo mọ ọkọ tó wà ní ìyàló. Ó sọ fún mi pé I can't wait to have this just Ghana control for the bank. Kí ni wọn ló wà ní ìyàló? Ló sọ fún mi pé I can't wait kọjọ kékeré àyíká. Ó ti pè mí láàárọ̀ yìí. So a lot of people are interested in the topic and that is what is in now. And why are you using video around there?
No,
YouTube.
Okay, live streaming.
Ọjọ́ ìlú náà.
Our flag shall be our symbol, that truth and justice reign. In peace or battle honor, and victory comes and gain. And unto our children a banner will our state. O God of all creation, grant this our one request. Help us to build a nation where no man is oppressed. As long with peace and plenty, Nigeria may be blessed. Let's go right and count the treasure in triumphant array, standing stronger in harmony, building our land together. Dreams of our founding fathers, we are striving to attain our counting values that we share. Through all ages be sustained. Institutes of chartered accountants of Nigeria. No like it, no like it, no accuracy we cherish. We uphold your integrity.
Thank you very much. We have our seat. The 37th chairman, Mrs. Olori Abioye Omopolanle Balogun, FCA, our baby chairman, the vice chairman, in person of Mr. Olutayo Sholanke, FCA, our deputy vice chairman, in person of Alhaji Kazeem Ojubele, FCA, chairman, body of past chairman, Mr. Olutayo Phillips, FCA, all other ESCO members present, you're welcome to all other ESCO members present, past chairman present with us. You are welcome to another edition of our members forum for October 2024. And we'll be starting this members forum with a welcome address by the 37th Idsican chairman in person of Mrs. Abioye Omopolanle Balogun, FCA.
Thank you, Reverend Chiens. Good morning, distinguished professional colleagues. I want to welcome everyone by starting the vice chairman who is on the way, Pa Olita Yosholanke FCA, the deputy vice chairman, Alaji Kazim Uchibele FCA, the chairman of the board of past chairmen, Mr. Tayo Phillips FCA, all are revered past chairmen. Permit me to just recognize you all because I don't know who and who are joining virtually. Thank you, sirs and ma'ams, for always being there for us. And also my colleagues that are here, the General Secretary, Mr. Taiwo Olanipe from FCA. Thank you for the good work you are doing. And the all ESCO members who are joined virtually. Thank you all. We are well appreciated. And also here with me in the from the studio here, we have the representatives of the technical committee in person of Mr. Adewale Olatunde FCA. Thank you, sir. Mr. Akim Mustafa FCA, and the entire technical committee who are putting all our member forums together, the source for facilitators, they bring and they put up the topics and which we are all really benefiting from. The technical committee is ably led by our very own Dikinestina Babatope FCA. We appreciate every one of you. And also our guest speaker for today, a member of the ICANN Governing Council and also a partner from Ernst & Young in person of Mr. Jamiu Olakisan FCA. Thank you, sir, for accepting our invitation. And all distinguished professional colleagues who are joining virtually. I know we have also professional colleagues from other districts. As time goes on, we'll recognize dignitaries amongst us because I don't have that information yet. We appreciate everyone, all the Bebe Law members. We appreciate you for your support every time. I want to appreciate you all for your support during the last members forum, which was the first physical meeting forum for this chairmanship year. And on this note, I want to apologize for the issues encountered, the technical issues, which made many people not be able to join. As they though eventually they were able to join their YouTube. We are truly sorry to all the technical issue which was beyond our control. And also, I want to appreciate you all for your support towards the just concluded 54th Annual Accountant Conference, which was held in Abuja, where Ikeja, the Face Center district, won the largest contingent with over 100 delegates, despite all the disappointments we had from the airlines, because a lot of our members were stranded, they cancelled their flights, they had flight delay. But despite that, we were over 100 in attendance on Monday in Abuja. I think we deserve a round of applause for this. Thank you very much for your unflinching support, because to go to Abuja is not an easy thing. There's no way you not spend like $500,000 to attend the conference. But we did not look at that despite the economy situation. So we appreciate you very much for your support. And all the members that joined virtually also, you are well appreciated. Our virtual delegates, we know people have been asking questions, when will they get their materials? As soon as we get the information from the institute, we will surely disseminate this on the member Telegram platform. And also, I want to apologize. There are some issues relating to the MCPD credit hours. A lot of complaints. We are indeed sorry. But I just want you to know that we are on top of it. We are having discussion with the institute staff responsible for this. And I will assure you that you will surely get your MCPD credit hours by God's grace. So kindly bear with us. We are truly sorry for this. Then as we promised you, we said on a monthly basis, we ensure we bring top-notch speakers, erudite speakers to speak to us on trending issues. That is why we are bringing here today Mr. Jamiu Olakisan, FCA, to talk to us on, speak to us on the trending issue, which is establishing effective internal control over financial reporting practices for companies to consider. I know a very seasoned speaker will do great justice to that. I'm not doubting it at all because he's a professional, highly experienced, a partner from one of the big fours. So please, I want to implore you to sit back and listen attentively to our speaker for today. Thank you and God bless.
Thank you very much, our 37th Reverend Lord Chairman. Without wasting much of our time, we want to go ahead to introduce our guest speaker and paper presenter. Our topic for discussion this month is establishing effective internal control over financial reporting, ICFR, practice for companies to consider. It will be delivered by our distinguished council member and a partner of S and Young, in person of Mr. Jamiu Olakisan, FCA. So I want to go ahead to read his profile. Jamiu is a partner at S and Young, EY, and the assurance leader for EY West Africa. Assurance at EY consists of audit, financial accounting advisory services, forensic and integrity services, climate change and sustainability services, and technology assurance. He is a partner in the financial service industry of audit. Prior to that, he was a partner in financial accounting advisory services, where he held several high-profile IFRS advisory engagements across Nigeria. Until July 2018, he was also the leader of the Financial Reporting Group / IFRS Debt in West Africa, and in this capacity, he was responsible for IFRS technical review, technical accounting consultation, deployment of IFRS training across the firm, and technical accounting opinion. He has over 20 years experience spanning banking and professional practice, and he is a thoroughbred professional accountant with extensive experience in teaching accounting and in professional practice. He holds BSc in Applied Accounting, First Class, and HND in Accounting distinction. A fellow of Association of Chartered Certified Accountants, FCCA, fellow of the Institute of Chartered Accountants of Nigeria, FCA, and associate member of Chartered Institute of Stock Broker, ACS. He is a member of the following technical group within EY: Financial Instrument Working Group, Global Fair Value Measurement, IFRS 13 Group, Global IFRS 17 Insurance Contract Group. He is a member of the Governing Council of the Institute of Chartered Accountants of Nigeria, our institute, a regular facilitator at ICAN MCPD programs, and an alumnus of Lagos Business School, Pan Atlantic University. Join me in welcoming our paper presenter in person of Mr. Jamiu Olakisan, FCA, HND, BSc, ACS, FCA, FCCA.
Recording in progress.
Okay, thank you very much for that introduction. Good morning, Chairman, and other members of the ESCO sitting at the Secretariat. Please permit me to stand on well-established existing protocol. I believe you can hear me.
Yes.
Yes, sir, we can.
Okay. And I'm assuming you can see my slide now.
Yes, sir.
Yes, sir, we are seeing your slide and we are hearing you.
Okay, so my slide is being presented in the presentation mode now. Good morning once again, professional colleagues. I'm extremely happy to be invited here this morning to talk to you on a topic which I consider very important in improving financial reporting in Nigeria. The title of the topic given to me is Establishing Effective Internal Control over Financial Reporting, Best Practices for Companies to Consider. I've been told behind the scene that together with Q&A, I've got only 1 hour to do this. I hope I'll be able to do this within the given time. Quite a number of things are included, despite the fact that I've compressed the slides, but quite a number of things to talk about. Because of the limited time given to me, I would like to go straight to the point. And let me start by highlighting the topic or the content. So I'm going to start with introduction. I'll briefly highlight FRC guidelines, the content. Then I will talk about ICFR implementation process. Briefly, I will highlight the COSO framework. I'll briefly talk about the types and objectives of controls that we use when it comes to ICFR. Evaluating identified deficiencies, I will talk about that. And lastly, I will talk about best practices for companies to consider. Starting from introduction, let me quickly put on record that what actually led to the so-called publicized internal control over financial reporting was the collapse of Enron in 2001. I'm sure that was what equally led to the extinction of Arthur Anderson, one of the big five firms that we had then. Following that collapse of Enron, an act was enacted in US in 2002, which is referred to as Sarbanes-Oxley Act of 2002. It's actually section 404 of that act that mandated entities whose securities are publicly traded in US to comply with internal control over financial reporting. And I want everyone to pay attention to what I've just said there. In US, where this thing was initially implemented, and up to today, ICFR is mandatory only for entities whose securities are publicly traded. Similar initiatives have been adopted in many countries across the world. For example, in Canada, they made it mandatory for entities that are considered to be public entities. Meanwhile, there's a difference between entities whose securities are publicly traded and public entities. For example, in Nigeria, what we refer to as public entities are those ones whose name ends with PLC, Public Limited Liability Company. It is a known fact that for you to be listed, you must be a public limited liability company. But what is equally certain is that the fact that you're a public limited liability company does not necessarily mean that your equity or debt instrument will be traded in public security market. So we have some PLCs, they don't have their equity or debt traded in public security market. So in US, only those entities that have their securities, equity or debt, traded in public security markets are required to apply Section 404 of that Act, which is the section that mandates management of the entity to report on the effectiveness or otherwise of ICFR, and it equally mandates the external auditors to audit using what we call integrated audit approach and issue a single report where reasonable opinion is expressed, covering both financial statements as well as effectiveness or otherwise of internal control over financial reporting. It is referred to as integrated reporting or integrated audit rather in US simply because the auditor's report does not just cover financial statements, it also covers the effectiveness or otherwise of ICFR. But in Canada, where they made it mandatory for public companies, reporting by external auditor is not required. And in many other jurisdictions, they've adopted similar initiatives, but not exactly the same as used by US. Let me also put on record that in 2022, UK decided to do a reform that will impact on financial reporting, governance, and audits. And UK was considering adopting something similar to Section 404 in US until there was a change in government, and there were many other things they are battling with that has not made UK to actually see that through. Back home in Africa, we have a country that is called Zambia that adopted something similar. In Nigeria, SEC issued its pronouncement in 2021. Initially, companies that are answerable to SEC were meant or required initially to adopt this thing in 2021. But subsequently, following the intervention of several stakeholders, SEC decided to extend the effective date to 2023. So I can tell you, and I'm sure many of you are aware of the fact that in 2023, those companies that are able to SEC, they all adopted ICFR. They reported under ICFR. But let me also put on record that when those companies were about to report, the requirement of SEC guideline was that in the annual report of 2023, for those companies answerable to SEC, I say answerable to SEC, not listed company. And there is a reason I keep on using that word. They were to publish the management assessment of the effectiveness of internal control over financial reporting in the annual report. And the external auditor of each company was equally mandated to issue a separate report, a limited assurance report on the effectiveness or otherwise of the ICFR. But shortly before they reported, SEC issued a circular asking those companies that at least only for 2023, those management assessment reports, as well as the auditor's report thereon, need not be included in the annual report. However, what SEC said was that for those who want to put it, they were not prevented from putting it. So when you look at those companies that are listed, if you look at the annual report in 2023, you may see some of them. The management assessment on ICFR was included in the annual report. Likewise, the external auditor's limited assurance report was equally included. Those are companies that decided that they wanted to publish. But you equally see the financial statement of some listed companies that in their 2023 financial statement, you won't see the management assessment report there on ICFR, and you won't see the external auditor's limited assurance report in that 2023 annual report. That was because of the circular issued by SEC, asking them not to include, but to send to SEC separately. FRC equally followed suit and asked those companies to send those reports to FRC separately. But that exemption was only granted in 2023. In 2024, those companies answerable to say we have to publish both the management assessment report as well as the auditor's limited assurance report on ICFR in their annual report of 2024. When SEC issued its guideline in 2021, FRC looked at it and felt that this is something good and should not only be used by those companies that are answerable to SEC. FRC decided to issue two different guidelines in that 2022. On subsequent slide, I will talk briefly about those two guidelines. But before then, let me quickly look at the definition of ICFR as contained in both SEC guideline and FRC guideline. Let's look at the way it's been defined. It says internal control over financial reporting is defined as a process designed by or under the supervision of the company's principal executive and principal financial officers or persons performing similar functions, and effected by the company's board of directors, management, and other personnel to provide reasonable assurance regarding the reliability of financial reporting and the preparation of financial statements for external purposes in accordance with generally accepted accounting principles, which in Nigeria is IFRS, and includes those policies and procedures that, one, pertain to the maintenance of records that in reasonable detail, accurately and fairly reflect the transactions and dispositions of the assets of the company. Two, provide reasonable assurance that transactions are recorded as necessary to permit preparation of financial statements in accordance with generally accepted accounting principles, and that receipts and expenditure of the company are being made only in accordance with authorizations of management and directors of the company. And the third one being to provide reasonable assurance regarding prevention or timely detection of unauthorized acquisition, use disposition of the company's assets that could have a material effect on the financial statements. Let me just point out certain things here. If you look at this definition from both SEC and FRC in the guidelines issued by both entities, they keep on making reference to reasonable, and reasonable assurance, right? Just like I've highlighted here as well. When it comes to giving assurance, the audit report that auditors issue is an assurance report. The level of assurance that is given in audit report is reasonable assurance. There is no way in our professional practice that we are required to give absolute assurance. Nothing like absolute. The best we can give, which occurs in audit report, is reasonable assurance. That is what we do in external audit. In the jurisdiction where we copied this, which is US, I mentioned it earlier that the type of audit they do there is integrated audit. And a single audit report covers both the financial statements and ICFR. That is why it's called integrated audit. And the opinion that is issued in US covering both is a reasonable assurance type, which is high compared with limited assurance. So in the guideline issued in Nigeria by SEC and FRC, including the guideline issued by FRC to practitioners such as us, the way the work is meant to be done is meant to be done in such a way that we are meant to issue reasonable assurance. However, at the end of the day, FRC says we should not issue reasonable assurance. We are asked to issue what we call limited assurance for specific reasons. Let it be known to everyone that limited assurance is lower than reasonable assurance in terms of the type of assurance you give. If you look at external audit reports, we always categorically say that this financial statement shows through a fair view or is presented fairly, right? That is reasonable assurance. And if it's not, of course, we give modified or qualified reports or disclaimer. However, when it comes to limited assurance, we are not going to say this thing shows through a fair view or this thing in terms of ICFR is effective. That is not what the auditor will say if the report is clean. What the auditor is going to say is, nothing has come to my attention that shows that the ICFR is not effective. Nothing has come to my attention that says or shows that the ICFR is effective. That is a limited assurance. But in terms of the work that the auditors are meant to do, it is of the same standard as what is being done in Europe. Another difference between what we do in Nigeria and what is being done in the US is, in US, a single audit report covers both financial statements and ICFR. But here in Nigeria, two different reports. Because the audit report will continue to be reasonable assurance, while the report we issue on ICFR is meant to be limited, so they could not coexist in a single report. Just for you to understand exactly what both SEC and FRC are saying in terms of ICFR, let me break it down again using the language you can understand about ICFR. Here, the definition here says, ICFR refers to the processes and procedures implemented by a company to provide reasonable. I put limited there because that is what we do in Nigeria as practitioners assurance to provide reasonable or limited assurance regarding the reliability of its financial reporting. ICFR helps to ensure that the company's financial statements are accurate, complete, and prepared in accordance with the applicable accounting standards, which in Nigeria is IFRS. So if you look at that definition, the focus is on financial statements. Which financial statement? The financial statements that are meant for external users, not the one that is meant for internal users, which is management. Any financial statement that is meant for external users is what we are talking about. The main objective is that we want to be sure that that financial statement is accurate, is complete in terms of content, and is prepared in accordance with the applicable financial reporting framework. It also covers accurate recording of transactions. Every financial transaction being recorded, you want to be sure that they are properly recorded. Authorization and approval. All financial transactions, you want to be sure that they are authorized by the appropriate person and they are approved. Financial reporting processes. All necessary financial information is captured and reflected in the financial statement the way it should be. Safeguarding of the assets of the company. You want to be sure that all assets that exist in the financial statement of the company are all well safeguarded. No unauthorized person has assets. No unauthorized person can use it, and the asset is not stolen. Compliance with laws and regulations. You want to be sure that those financial statements are prepared in accordance with the applicable law, which in Nigeria is PAMA plus FRC Act, and both of them are making reference to IFRS and the other regulations. When it comes to tax, we want to be sure that the provision of the tax laws have been complied with in completing the tax that is reflected in that financial statement. Let me briefly highlight the two guidelines issued by FRC. So what I've said is thus the introduction to ICFR, the objective and the scope. The FRC guideline issued in 2022, there are two. The first one is called Guidance on Management Reports on Internal Control over Financial Reporting for Selected PIAs. And the second one is the Guidance on Assurance Engagement Reports on Internal Control over Financial Reporting. Please take note that the first guidance applies to all PIAs, except the following. Number one, listed entities to which said guidance apply. So if you're a listed entity, you don't need to apply said guideline because we'll have complied with said. And if you have complied with said, you've already done what FRC is calling you for. So you don't need to apply that anymore. Two, small companies as defined by CAMA, you are exempted. Three, unit microfinance bank as defined by CBN, you are exempted. 4, insurance brokers, you are exempted. 5, non-tertiary educational institutions, you are exempted. 6, non-tertiary health institutions, you are exempted. And 7, any other entity as may be considered by FRC from time to time. Professional colleagues, what you need to do as someone who is working in a business organization is first to identify whether the organization you are working with meets the definition of PIAs, public interest entities. If it does not, then you are fine. But if it meets that definition, then you need to know whether you are one of the 7 entities that have been excluded from the scope of that guideline. If you do not fall into the category of these 7, then you must apply or implement or establish ICFR in 2024. In 2024. In 2024. A number of companies will fall in that category. other than these 7 that have been excluded. And I'm wondering whether as of today, those companies are all aware of the fact that they are supposed to implement, operate, and start reporting in this 2024 on ICFR. The second guideline is actually for the practitioners, the external auditors, and it covers different aspects of the audit of ICFR, starting from planning the audit, testing controls, evaluating, identify deficiency, the wrap-up of the engagement, and the reporting. So I believe every external auditor who is auditing the PIE, other than those 7 that have been excluded here, you are familiar with the content of this second document. It's available. I believe it should be available on FRC website. And you are going to implement SAFE in doing the audit, not of the financial statement, because we've always done the audit of financial statement, but you need to do the audit of ICFR in 2024. So for the year ending 31 December 2024 that you will audit, ending 2025, you need to make sure that you follow the guideline. And it's a separate engagement. It's not part of extra audit of financial statement that you've been doing prior to now. Because I said PIE, that guideline first, that first guideline in reference to PIE, I would like to remind everyone here the definition of PIE as contained in the FRC guideline of FRC Act of 2023. It's FRC Act, and it is something that cannot change until the National Assembly considers changing it. So this definition, unfortunately, will continue to live with it until anything changes. And what is it saying? It says PIEs as defined in FRC Amendment Act of 2023 includes 1, government and government organizations. All government and government organizations are PIE. The implication of this is that they should all adopt ICFR in 2024. Are they all prepared? That is a different discussion entirely. Listed entities on any recognized exchange in Nigeria, of course, they have been asked to apply SEC guidelines. So if they have applied SEC guidelines in 2023, of course, no issue for them. Non-listed entities that are regulated, a stockbroking firm, an investment management firm, pension, PFAs, you are all regulated. Insurance companies, you are all regulated. And as such, you've got to comply with that requirement. Public limited companies, of course, those are PLCs that possibly may not be listed. Private companies that are holding companies of public or regulated entities. Concession entities, of course. We may want to ask questions around this from today to tomorrow. I think FRC should do the best to tell us what they mean by concession entities, because unfortunately it's not defined in the Act. Privatized entities, in which government retains an interest. So if there is any entity that has been privatized, but government still retain elements of interest, regardless of the percentage still held by government, it falls within the scope. The implication is that all the discos, entities engaged by any tier of government in public work with annual contract sum of 1 billion and above, and settled from public funds. So if you have got a contract from federal government, state government, or a local government, and the value of that contract is up to 1 billion, then you are a PIE as defined by FRC. Licenses of government, again, that is vague. What is the meaning of licenses of government? I think clarification is needed from FRC on this. And lastly, all other entities with an annual turnover of 30 billion and above. There are issues around this. For example, this 30 billion was based on FRC Act that has been with National Assembly for like maybe 2021 until it was passed in 2023. And we all know that in Nigeria, the considering what happened to our exchange rate last year, uh, the purchasing power has gone down significantly. So one can say that 1 naira like 2 years ago or a year ago is less than half or is about half. So this 30 billion, should it still be valid? Or that is what is there in the heart until it has changed. Nothing can be done. Turnover. What is the meaning of turnover? We've been using this word from the time before we adopted IFRS. Unfortunately, turnover is not defined anywhere. Although it's understood by many people to be revenue. But is it revenue or is it revenue plus other income? For insurance companies, what is the meaning of turnover? For banks, what is the meaning of turnover? I think FRC will need to help us to define it. But this is not the focus. I just felt I should mention here for everyone who is attending this meeting to be aware of the fact that if you are a PIA, as defined here, and you are not one of the 7 that have been excluded on the previous slide, you've got to apply or implement and operate ICFR. But this is October. I believe it's late for any entity that has not started now. It's a bit late. ICFR implementation process. I consider it important to bring this to our attention because we've been talking about ICFR. What is all about? What is it all about? Permit me to quickly run through this process in a way that we can appreciate what we are talking about. From the previous definition of ICFR, you will have seen that the focus is on the financial statement meant for users outside the entity. And to that extent, what it tells you is that you want to ensure that it's accurate, you want to ensure that the content is complete, and you want to be sure that it has complied with IFRS. So the starting point is actually to pick that financial statement. Look at the statement of financial position, which is what we used to call balance sheet. Look at the statement of P&L. You will see all the various accounts there. For example, for a regular company, in the statement of P&L, you will see revenue, cost of sales, distribution costs, admin expenses, other income, investment income, share of profit of associates, profit before tax, income tax expense, profit for the year. Then you see the other items in the other comprehensive income. You go to the statement of financial position, you will see under non-current assets, property, plant and equipment, intangible assets, investment property. Under current assets, you will see something like inventory, trade receivables, cash and bank balances. You see under equity and you see under liability. Those are things we refer to as accounts. But all those accounts, are they all significant? The answer is no. In the process of implementing this ICFR, what we have seen as the best practices, companies will engage consultants. Why are companies engaging consultants? Is because the belief is that you may not be able to get it right. In fact, I was talking to somebody in US on this, and they were wondering that what kind of ICFR are we implementing in Nigeria? That they were just hearing in this 2024. Because for them, when they did it, the law was passed in 2002 and they were giving up to 2024. Of course, you can equally say that FRC has made this pronouncement since 2022 and their companies have been given up to 2024. But for them, they said it was very scary. Very, very scary in terms of the amount of work that has to be done and what they have to pass through to get it right. So not all accounts I've mentioned will be significant. You need to identify those accounts that are considered to be significant. And this is where you need to work with external auditors. Even though when you engage your consultant will work with external auditors to determine of all these accounts on the basis of those two primary statements, which one are considered to be material. In determining whether or not a particular one is material or significant, auditor has materiality that he uses when he's performing audit. And it's that same materiality we use to determine which account is material, which one is not material. Of course, when it comes to determining materiality, it is usually a quantitative threshold. For those who are doing external audit here, they know what I'm talking about. You can use earning basis, you can use asset basis, you can use activity basis. Aside from that, it's not only quantitative threshold alone you use. You need to equally use qualitative threshold to determine those accounts that are material. When you determine those accounts that are material, you need to connect them with significant processes. So us, we refer to these as significant classes of transaction or scores. Let me give you a typical example of significant processes. Let's look at when the company is selling. When the company is selling, the process of the company will differentiate between credit sales and cash sales. When it comes to credit sales, the process may begin from when the customer who is buying on credit places his order. Based on that order, it will be accepted, it will pass through a process. Internally, you need to evaluate whether that customer is of good financial standing to be granted that credit sale or not. After you pass through that, some people will review, they will approve. Eventually, you make a decision that, yes, let's make the credit sale to this person. Eventually, the credit sale will be made. The good or service in question, the control will be transferred to the customer, and you have to have it recorded, right? When you record that credit sale, you know it will impact on two different accounts. For example, we all learn this, we are all accountants. We are going to be debitory receivables and you will credit revenue or sales, right? You debitory receivables and you credit revenue or sales. That trade receivables is one of the items on the face of the statement of financial position, right? That revenue is one of the items on the face of the statement of your health. Those are accounts. If those two accounts are significant, right? The process through which they pass through, right, is called what? Is called sales, credit sales process. That process could be a significant process leading to two different significant accounts. But they may go beyond significant accounts too, because I've not mentioned the issue of VAT. Of course, when you sell, whether car sale or credit sale, you need to build VAT on it, unless you are exempt from collecting VAT. When you build VAT on it, right, that VAT, you are not going to record it as part of revenue. You need to record it as VAT payable. So if that account is equally significant, so the account that will be affected may be more than two. So that is what we call significant processes. When you look at these accounts, there's something we call assertion. We all did it when we did audit and assurance. These assertions will depend on whether the item features in the statement of financial position or those items feature in the statement of P or L. For example, for items in the statement of financial position, relevant assertions include existence, valuation, presentation and disclosure, completeness. For items in the statement of P or L, the relevant assertions include items such as completeness. Of course, completeness will affect both SFP items and P or L items. Measurement, occurrence, whether the income or expenses are correctly measured, whether the revenue has occurred, whether in the statement of financial position, the property, plant, and equipment is correctly valued, that is valuation, whether the receivable we are seeing there exists, whether the PPE we are seeing there exists. These are assertions. So you need to identify all relevant assertions for all the accounts. When you identify these assertions, you need to connect them back to the risk. What are these risks? For example, let me pick trade receivable. If I'm auditing your financial statement or I see trade receivable in your financial statement, there are some risks that are connected to that trade receivable from the perspective of the assertions. For example, when we say existence, how am I sure that that trade receivable exists? From the perspective of valuation, if that receivable is stated in your book at 10 million, how am I sure that that value is the right value? So that talks to valuation. If I see property, plant, and equipment in your book at a particular value, how am I sure that value is the right one? That talks to valuation. How am I sure that that PPE exists? That talks to property, plant. That talks to existence. So for each of these assertions, along the critical path from beginning to the end, from initiation, recording, processing, and reporting, you need to look at those risks that could affect that each of those balances and each of those amounts that are stated in the statement of P&L. So this is an exercise. Even though I've summarized it here, you need to do this in a more elaborate manner. Aside from that, when you identify your risk, you now need to look at controls. Controls are of various types. We have what we call entity level controls. Those are the ones that exist at the highest level of the organization. Whether there is a code of conduct that management has established. A very serious-minded entity should establish code of conduct which govern the behaviors of the employees, including management. Whether there is an organization chart that shows everything. Whether we have policies that govern everything. Policies on employee recruitment, when employees have committed offenses, what should be the penalties? There should be policies on different areas of the business. So the existence of all these things and whether or not those controls are implemented correctly, those are the things we look at under entity level control. So that you need to prepare documentation around all this. So under ICFR, that is why it's meant to be taken as a project that will span a period of 1 year or more. Because if an organization doesn't have all this, you need to put them in place. Otherwise, the control will fail at the end of the day. We have process level controls. I've just highlighted some examples of accounts here. So for each of these accounts, there will be process level controls that will the accounts of processes. Revenue recognition is a process. Purchases of assets is a process. So for each of these processes, you need to identify the various controls that exist to deal with those risks that exist. The risk that will prevent that receivable from being correctly stated. The risk that will prevent that PPE that you have purchased from being correctly stated. The risk that will prevent that revenue from being correctly stated. Those are the risk control. You need to identify those controls and you need to identify the risks to mitigate them. You see something we call FSCP. This is called Financial Statement Close Process. It's a process that begins from exporting your trial balance either into an Excel or a system that you use to prepare your financial statement. And at the end of the day, you will now pass additional journals that have not been posted into your system to ensure that you eventually prepare your financial statement. That process begins from exporting trial balance up to the point that you prepare your financial statement. So if you are an entity that you do not prepare your financial statement yourself, you are waiting for external auditors to come and do it for you, then you are going to have issue when it comes to FSCP. Because it shows that you do not have control around it. There are risks that financial statement, the disclosures may not be presented correctly, but what process do you have to ensure that those disclosures are correctly presented? Then we have what we call general controls, which come in form of manage changes, manage operations, and manage assets. All these need to be properly documented. It's at this level that you will properly do the risk. It's not all the risk. That there is a process you follow. You first identify the risk, the universe of risk. Then eventually, it may not be all of them that are relevant to you. You need to identify control. Again, it may not be all of them that are relevant to you. But when you are done with your documentation, there is something we call risk control matrix that you need to do. So that for every control, there is a risk that is meant to deal with that. Sorry, for every risk, there is a control that is meant to deal with that risk. That needs to be put in place. Then the next thing, when you are done with all this, you put all these things in place, you believe you put control in place, then you now need to test the design. Before you test the operating effectiveness, the first thing is the design effectiveness. What do we mean by design effectiveness?
Thank you.
For example, if there is a risk that your expected credit loss may not be properly determined, right? You need to look at the control that you have put in place. Maybe the risk is, the control is that there is somebody within the organization with extensive knowledge of expected credit loss who will do the calculation. Part of the control is that it will get all the necessary external data and it will check them. Part of the control is that another reviewer that has more knowledge than the preparer will check all the calculations that have been done by that person that falls through the calculation. That person will check that all the external data, for example, the macroeconomic variables, they are up to date. You need to put in place all the controls to deal with that. So there is a preparer, somebody who does that calculation. There is a reviewer with knowledge. And you need that reviewer, when it's checked, there must be certain things to check. So you need to look at the design. Is this control properly designed? A control will be properly designed if it is sensitive and is precise. It's able to capture that risk, to prevent that risk, or to detect it. If there is no control at all, or there is control but it's not precise and it's not going to deal with that risk the way it should be dealt with, that means there is design ineffectiveness. That means the design is not properly done. But it may be designed well, but is it operating like that? That takes it to the next level, which is what we call operating effectiveness. You can have a good, nice, good-looking control in place, but is it really being operated? If it's not being operated, then that means the operating effectiveness is going to lead to an issue for you. So you need to deal with the effectiveness of the control. In the process of that, you may identify that. When you identify that, then you go back and remediate. That is why you need to start the process on time, so that you have sufficient time to be able to go back and remediate. Oftentimes, when you test the design effectiveness, it may fail. Then you go back and redesign it. Then when you test the operating effectiveness, maybe somebody is supposed to check something, he fails to check it. Or he checked it, but he did not check what he was supposed to check. Error still went through that process. So that means you go back and remediate those controls. When you are done with all this, then you come to the time of reporting. In your 2024 annual report, if you fall within the categories of entities that should report, management must put the assessment there. And that assessment they are going to conclude whether the ICFR is effective or not. And the external auditor will come and review what has been done by management and is going to put his limited assurance report there, where we confirm whether the ICFR is effective or not. Professional colleagues, when SEC issued its guidance in 2021, and FRC issued the guidance for management in 2022, they made reference to COSO framework. What is COSO? Committee of Sponsoring Organization of Tradeway Commission. So this is a global framework that is meant to be used, that is very robust when it comes to internal control. This COSO framework sets for the requirement for an effective system of internal control that provide reasonable assurance regarding the achievement of an entity's objective. It consists of, excuse me, 5 basic components. These are the 5 basic components. And 17 principles representing the fundamental concept of each component. On the next slide, I'm going to show you those 17 principles, but I'm not going to talk about them because that is another kind of war entirely that I cannot open within the time given to me. Professional colleagues, it's not all these that will be relevant for ICFR. That is one. Number 2, the said guidance says cultural framework is good, but that is not the only available framework globally. There are other frameworks. You can use them. Likewise, the FRC guideline says the same thing, that there are other well-known frameworks. But I can tell you that the one that is well-known, the one that is mainly, the one that Nigerian companies make reference to is this coastal framework. But let me quickly put it on record that the coastal framework that you saw on the previous slide has compliance, operations, and financial reporting, and it has the 5 components: the control environment, the risk assessment, the control activities, the information and communication, and monitoring. When it comes to internal control over financial reporting, as you have seen here with this red line, the control environment and risk assessment, they cut across the 3 areas of compliance, operation, and financial reporting. But when it comes to control activities, information and communications, and monitoring, we restrict ourselves to only financial reporting. So that is what this diagram is meant to show. It's not all the areas of the control framework that are within the scope of ICFR. And here are the 17 principles. 5 under control environment, 4 under risk assessment, 3 under control activities, 2 under information and communication, and 2 under the last component, which is monitoring. Permit me to also move. Here is an example of how this assessment is done, focusing only on entity level control. And let me just pick one here to walk you through it. So, for example, it says control environment, principle 1. The organization demonstrates commitment to integrity and ethical values. The focus here is addressing deviation in timely manner. We want to focus on whether the organization has a way of addressing deviation in a timely manner when it comes to integrity and ethical value. Of course, in every organization, you need to have policy around integrity, policy around employees behaving ethically. What if there is a deviation? Do you have something in place to deal with that in a timely manner? So in terms of control objective, it could be to address deviation in a timely manner. So deviation from the entity's expected standard of conduct are identified and remediated in a timely manner and on consistent basis. So you want to see, it's not enough to have a document that says employees will need to behave ethically, employees will need to act with integrity. When they fail to behave so, do you have the policy and procedure in place to ensure that you deal with that on timely basis? What is the risk? The risk is that deviation from the entity's expected standard of conduct are not identified and remediated in a timely and consistent manner. That is the risk. That is the risk. Then which one is the control? Perhaps you need to number that control. This is the control. Then this is the description of the control at entity level that deals with this risk. A code of conduct policy document is documented, highlighting the acceptable behaviors and consequences for deviation to the policy. That is the documentation that is needed. It's not enough to have documentation in place. Do you have structure to deal with people that violate that? A disciplinary committee consisting of senior management is in place to deal with alleged breaches to the acceptable code of conduct within the company. What if that unethical behavior is caused by the person who is the chairman of that disciplinary committee? Do you have a process in place to replace it and ensure that the next person that is sitting in that committee is somebody of a higher rank? Because if you put somebody of a lower rank, it won't be able to perform. So you need to put all this in place. The decisions of the committee are documented and implemented in a timely manner. If that committee sits, the auditor wants to check. Show me the evidence of the fact that that committee sat, they took a decision, and this is how the decision is implemented. Show me the evidence. If you can't show that, then you can't say this control is effective. So all these talk to the design of the control as well as the operating effectiveness. I will only take that as an example. You can go through the slide later because of the time given to me. Let me briefly go through the types and objectives of control. Again, types of control can be three. For example, we talk of entity level control, which is the example I look at there. Those are controls that operate at high level of the organization, the highest level of the organization, usually performed by management, by those charged with governance, by board, by audit committee, for example. Audit committee is responsible for the review of the financial statement. If that is what the law says, if they don't do their work, then that means entity level control is already having an issue. So ECL, entity level control, which is what we refer to as PLCs, are pervasive to the organization and they establish a basis of effective operation of control related to specific processes. That is PLC. What about transaction level controls? These are controls that operate at the process level. For example, when it comes to cash receipt or cash disbursement, are we sure that the cash receipt is not diverted? Are we sure that you have not disbursed cash or unauthorized use? So these are controls that you need to put in place. Payroll, are we sure that you are not paying ghost workers? Are we sure that the right amount that you have paid is being posted? Are we sure about the arithmetical accuracy of everything? These are different areas when it comes to transaction level controls. Then the last one is what we call IT controls. IT controls are of two types. We have what we call IT general controls, and we have IT application control, ITA. On the next slide, I will talk more about this. So the IT general controls, there are three types that you will see on the next slide. But control can also be grouped in terms of manual controls. Manual control means you are not relying on the system at all. You are not relying on the use of IT system or any information produced by IT. For example, the fact that you have a physical person, a security officer, standing in front of your office to ensure that your assets are not stolen, or you have a security person in your warehouse to ensure that your inventory are not carted away, means it's a good example of manual control. It's a good example of manual control. What about bank reconciliation statement that is performed by a human being? Is that a manual control? The answer is no. That is what we call IT-dependent manual. An IT-dependent manual is a control that is performed by a human being, but it uses system of the organization, or it uses the information generated from the system of the organization. When you are performing bank reconciliation statement, what do you need? You will print out your GL, right? Or you download it into your laptop. You will get your bank statement from the bank, that is external. Then you will begin to look at the two. What are those items that are not clear, so that you will use them to prepare that bank reconciliation statement. That process is performed by a human being. That is what we call it IT-dependent manual, because it's using the information of which is the cash GL generated from the system of the company to perform it. In this era of technology, in this era of AI, we've seen that, in fact, AI or system bank reconciliation bank reconciliation system can be automated in such a way that it's not human being that is preparing it or performing that function. If that is happening, then that means it's no longer IT dependent manual, because there is no manual process there. It's being done by the system. Then we have the application control. Your relevant IT, your relevant software that you are using to produce and generate your financial statement. We need to look at the controls that have been built in those IT. Application controls are performed directly by the system, not by human being. Control can also be grouped according to the objective. The objective may be to prevent. The security man that is there to prevent unauthorized access is a good example of prevent control. That thing that has been built into your software such that where you are supposed to put value, if you put alphabet, it will reject it. It's a type of prevent control. But despite the fact that we have prevent control, errors, misstatements can still go in. If the statement goes in, how do we now ensure that they are detected and corrected? Every detect control should be followed by correct procedure. If you detect and you don't take any action, then what have you done? You need to detect and you need to now correct. Bank reconciliation statement will fall under the example of detect and correct. Why are you doing bank reconciliation? You want to be sure that there are some things that nothing that should have been posted is standing idle. So in the process of doing the reconciliation of the bank statement, you will uncover those things that you may need to post. So you detect and to correct. In the banking sector, there is something called callover. When you do callover, regardless of who is doing it, it's a good example of detect and correct. Because you want to detect all those deposits that have not been correctly posted. You want to detect all those withdrawals that have not been correctly posted. And when they are detected, they should be corrected accordingly. So this is grouping control by type or by objective. Here we have the three types of IT general control: the manage changes, the manage access, and the manage IT operations. So on ICFR, we need to do this. On audit engagement, we do this before now. But if you look at the type of audit report we issued before now, what we always say there is that we do not test control with the intention of reporting on control. We test control to determine whether we want to rely on those controls to limit the amount of substantive audit procedures we perform. If those controls, the level of reliance is not to rely, then we will increase the amount of substantive audit procedures we do to get sufficient and appropriate audit evidence. But if we are able to rely on the control, it will minimize the amount of substantive audit procedures, but not to report on control. But under ICFR, we are reporting on control. We are reporting on control. How do we evaluate the efficiency? This is second to the last area. According to FRC guidelines, you need to evaluate every deficiency you have. You need to evaluate every deficiency. The second guideline that was issued by FRC to the practitioner contains this thing I'm about to discuss here. What is a control deficiency? is defined as an absence or insufficiency in the design or operation of the control that does not allow management or employees in the normal course of performing their assigned function to prevent or detect misstatements on timely basis. When you do not have control at all to mitigate or deal with a particular risk, it's a deficiency. When you have, right, but it's not properly designed because it's not precise enough. It's not precise enough to deal with that risk. It's a control deficiency. You have is precise, but you are not testing it, or you tested it, it fails. The operating effectiveness is it fails. Again, it's a control deficiency. Now, the fact that you have control deficiency in the guideline, typically you have deficiency. Then you have what we call significant deficiency. Then at the highest level, you have what we call material weakness. The fact that you have deficiency does not mean one or more deficiency does not mean you are going to say the ICFR is not effective. No. But when you are doing the evaluation, you need to consider the severity of each control deficiency. You need to look at it individually and in combination to determine whether you are going to have what we call significant deficiency. So a significant deficiency means when you begin to look at the severity of that deficiency, it depends. The severity of that deficiency depends on whether it is reasonably possible that the entity control will fail to prevent a misstatement or detect a misstatement. And when that failure occurs, the magnitude of the impact is going to be significant. The magnitude of the impact is going to be significant. So the reasonability, whether it's reasonably possible that it will fail, and when it fails, the magnitude of the potential mistake is going to be significant. Those are the two things we need to look at in determining whether individual deficiency or a combination of deficiency will result into a significant deficiency. Then we move to the third one, which is material weakness. Professional colleagues. The FRC guidelines says once you see one or more, at least one material weakness, then you cannot say the ICFR is effective. Management must conclude that the ICFR is not effective, and the auditor can no longer say nothing has come to my attention that the ICFR is not effective. You need to, it is either you issue qualified ICFR report, or it is disclaimer because you have not been given everything you need to do. Those are the three types. It's either it's clean, it's qualified, or you issue a disclaimer. In the guideline issued by FRC, there are 4 key components that will signify material weakness. They call them indicators of material weakness in ICFR. I will want everyone to pay attention to this because this is the crux of this discussion. These are 4 indicators that the ICFR is material weakness. It has material weakness. And once you see at least one material weakness, you can no longer conclude that your ICFR is effective. Number 1, identification of the fraud by senior management of the entity. There is a fraud that has been committed by the senior management of the entity, regardless of whether that the amount involved is material or not. Once there is a fraud, it shows that your ICFR is not effective. If it's effective, it should have been prevented or it should have been detected and corrected. So once you have identified the fraud, whether or not material on the part of senior management is an indicator that ICFR is not effective. Number two, restatement of previously issued financial statement to reflect the correction of material misstatement. Professional colleagues, according to IS1, presentation of financial statements, there are three reasons that can make you to restate the prior year numbers. There are three reasons according to IS1. Number one, when you correct prior year error retrospectively. Number two, when you change your accounting policy and you change it retrospectively. Number three, when you do a reclassification of numbers and it has impact on the prior year. Those are the three things that can make you to restate the prior year numbers. But of the three of them, only one relates to what we are talking about here. If you change your accounting policy retrospectively and you state the prior year number, that's not what we are talking about here. Two, if you do a reclassification of the prior year number, that is not what we are talking about here. But if you correct prior year error that was not detected last year, it wasn't detected 2 years ago when it occurred, it wasn't detected 3 years ago when it occurred, only detected this year. And when you detected it this year, you have to correct the prior year number that are shown as comparative. In the current year financial statement. Because of that error, then that is an indication that the ICFR is not effective. What that tells you is you need to now do more to avoid error. There can be errors, but it shouldn't be material. So we're around restating the prior year. Number three, identification by the practitioner of a material misstatement of a financial statement in the current period in the circumstances that indicate that the misstatement would not have been detected by the entity's internal control over financial reporting. I want everyone to pay attention today. Both the auditors and the preparers, you need to pay attention today. If your auditor comes and is the one that identifies material misstatements, and he asks you to go and correct this error, and that error was never detected, the system of internal control over financial reporting you are operating could not have detected it, could not have prevented it, could not have corrected it. It was the auditor that come to do this, and that error is material. It's an indicator of what? Material mistakes. What does that tell you as a preparer? What does that tell you as a manager? What that tells you is that within your financial reporting unit, within your finance department, you need to have competent people that will be able to ensure that no such error is detected by the auditor. If you are the type that you wait for the auditor to come and do everything, this is the time for you to have everything. Because when the auditor comes to start detecting errors and giving you joint and support, it shows that your ICFR is not effective. If it's effective, why has it not detected that error? Why are you waiting for the auditor to come? I think this thing is going to force a change of behavior. For people who have done audits in big firms outside Nigeria, talk to them. When they go there to do audits, especially in US, UK, how will they be able to discover any error that would not have been picked by the system of the country? Hardly. Because they have a robust system in place, they have people within the finance department that are competent and know what they are doing, that will be able to detect all those things that are not correctly done. Don't wait. I think the most important part of this discussion is you are not to wait for the auditor to come and help you to figure out material misstatements, and will be giving them to you as what? Adjustment to pass. And the last one is ineffective oversight of the entity's external financial reporting and internal control over financial reporting by the entities audit committee. Of course, all PSCs are mandated by CAPMA in Nigeria to have audit committee. In fact, some will go as to the extent of, in addition to the statutory committee mandated by CAPMA, you also have what we call board audit committee. They are not just meant to be figurehead people. They are meant to play specific role. They are meant to challenge the auditor. When the auditor comes to present, they are meant to challenge. They are meant to review his work and challenge what he has done. And they are meant to maintain oversight over the financial reporting. They are meant to, when accounting, almost every year accounting policies are changing. The audit committee, are they aware of that? The accounting policy in their financial statement, is it not the auditor that is coming to say, oh, this policy is outdated, this standard has changed, you should have updated this accounting policy? Don't wait for the auditor to come and do that. It shows the audit committee has not performed its function. And it shows that those in charge of financial reporting did not perform their function. That is why the auditor is coming to do it. In terms of the best practice, this is my last slide. I know I've exceeded my time. The best practice for companies to follow is, number one, the tone has to be set right from the top. From what I've said so far, implementation and operation of ICFR is not something that will be left only to the finance department and the internal audit department to deal with. No, the tone has to be set right from the top. And when it comes to control environment, one of the 5 components of the COSO framework, talking to the control at the highest level of the organization, you need to have comprehensive control environment that is tested and that is working. You need to conduct a thorough risk assessment to be sure that all risks that have potential to occur, and when they occur, they will have magnitude that is significant. You need to identify them and bring them out. You need to ensure segregation of duties. If there is no segregation of duty, there can be control. If it's the same thing that is recording, I'm the one that is preparing, I'm the one that is checking myself, I'm the one that is doing everything, then there is no way you can have effective ICFR. There must be adequate segregation of duties. If we have heard of the collapse of Barings Bank some years back, it was engineered by a man called Nick Lessing. Barings Bank was a UK bank, over 200 years bank, that was brought down by a man called Nick Lessing. The man is still alive up to today. Is in UK. This man was seconded to, was it Singapore or Hong Kong? Branch of that bank. And he was trading in the derivatives. This man did not go to higher institution. This man did not have good knowledge. It's not as if he did CFA or he did anything that gave him the knowledge of derivatives. Perhaps then it was only a secondary school holder. He started working in the bank and he rose to be seconded to their office either in Singapore or Hong Kong, I can't remember. That was not the main issue, but the main issue is that there was no adequate control on that thing. And the man was trading, making huge losses because nobody was checking him. And it was covering up, covering up, covering up. At the time the thing became known, it was late. That ban was over 200 years and it was brought down by Dharma. There must be segregation of duty. It's very important. We've all learned this in our elementary auditing. We need to implement automated controls and use technology. Use technology, use AI. We need to document policies and procedures properly. There's a saying in my firm, if it is not documented, it is not done. You can't begin to explain this thing without showing us how this thing has been documented. You need to conduct regular and timely reconciliation. Reconciliation is important. It may appear basic, but it's very, very important. It's very, very important. For a company that doesn't do reconciliation, timely, then and one day you can say ICFR is effective. Because when you are testing the operating effectiveness, it's not just about the fact that you prepared the bank reconciliation statement. Was it done timely to identify the errors on time? Imagine callover is not done in a bank on daily basis. You know the amount of errors that if they have to wait till the end of the year or end of the month to do callover, a lot of errors, a lot of things will go undetected in banking sector. Perform regular monitoring and testing of the control. You need to ensure management review and oversight. There's something we call management review control. That is a management, a senior person performing review. It could be a review of financial statement. It could be a review of accounting estimate, where estimate is required. That review has to be done. That document has to be prepared by somebody who has the knowledge. The person who is reviewing it needs to have more knowledge than the person who prepared it. If not, what are we checking? If the person reviewing doesn't have as much knowledge as the person that prepared, what are we checking? We are just fulfilling all righteousness. And when we are checking the fact that you perform that test, there are certain things we want to see. There are certain attributes we want to see. We want to see what you checked to show that truly you have the knowledge. These are the things that whoever is testing will look at. You need to maintain proper process, proper access controls, both to the system and to the assets of the company. Ongoing training and awareness is key. What we are doing today is part of the training, but it's not it. This one is just an eye opener. It is not the main thing. It's just an eye opener. You need to provide ongoing training and awareness. You need to ensure effective internal audit function. Even when you bring in a consultant in year one to help you do it, unless you have so much money to continuously use consultant going forward, I can tell you, in US, based on what I was told earlier, which I mentioned to you, that when they implemented this thing in US, it was very scary. All entities that are listed in US, regardless of where they have operations, including those that have operations in Nigeria, they have to do it. Initially, maybe for the first 2 to 4 years, they were using external testers, which are professional firms like ours, to perform all those functions. But it got to a point that their internal control, the internal audit people, they were able to master it and they started doing it themselves. You need to test before the external auditor will come and test. Document retention and management is very important. If you have performed a particular control, you say you have reviewed. We want to see your review point. We want to see the tick mark that you put on that document to confirm that truly you've done it. You need to retain those documents for whoever is coming to check, to look at it. And the effective use of data analytics will really help you to improve the internal control over financial reporting. At this juncture, I would like to say thank you very much for the opportunity to make this presentation. Thank you. I've come to the end of my presentation.
A round of applause for the paper presenter. You will agree with me that You agree with me that it was a wonderful paper presentation. A very wonderful paper presentation. Please, members online, please just give a round of applause for our paper presenter. We'll be taking questions and answers for the next 15 minutes. So if kindly signify by raising up your hand if you have any question. And no killer or another. Please kindly unmute and ask your question.
All right. Good morning, senior professional colleagues. Good morning, the presenter, Jamiu. Thanks so much for this incisive presentation. We know that the ICFR is a current discussion and process every listed company and even company under SEC are looking at right now. Now, my question goes to a company who wants to adopt this process without using consultant. You have looked at probably your transactions in the past, how incomes are recognized, you have looked at your key items in the balance sheet, and to you they are well measured and all that. And probably want to beat your chest to the fact that in the past your external auditor has not really been picking or seen any material misstatement or accounting policy that needs to be changed that was not changed. What are the necessary steps you think probably somebody wants to adopt it without a consultant can look at having this understanding that I said your past experience has shown all these checks have been done in the past and I want to adopt it without the service of consultant for your auditor to now come and do the testing and give the attestation report that yeah, it is efficient or not efficient as the case may be. So what would be your advice in that regard? What should the internal auditor look for that to make sure that it's well prepared before the external auditor will come and do the ICFR testing before giving the outstep?
Let me call one of our past chairmen, the person of Olakisan Kwade, to please unmute and ask his question.
Thank you very much, my 37th chairman and general secretary. All protocols duly observed. First and foremost, let me appreciate my brother, Jamiu. Was not expecting anything less vigorous for that presentation on ICFR. You always come out to reawaken us to some of the things in line with the regulators, which is FRC. You have given us a tip of the iceberg. I'm just looking at how we can have an extension of this because it's Jamiu. I've seen area where even external auditor find it difficult to detect certain things, and a lot of organizations are going down the drain. How can we take it further from where we are beyond this 1 hour presentation to where we can have an in-depth into this, assisting our members in Ikeja, knowing fully well, you know, this is the Payseta district where others learn from some of the things that are happening. That's just my question. Thank you so much. I appreciate it.
Thank you very much, our past chairman. Let me call on Pius Oni. Pius Oni, kindly unmute and ask your question.
Yeah, thank you so much for this wonderful presentation. I want to thank Jamiu for a wonderful job. I have two questions from what we made practically on grant in the course of implementing this ICFR. And the first one I have is on the challenge we have very few one we have implemented here. We did it with the Big Four. The Big Four are the auditors, and we really had a wonderful time on those ones. But my question is on those that are being audited, TIEs that are being audited by local firms. You discover that number one, the awareness are not there. You don't even know they need to implement. You tell them they are saying the MC is not aware, nobody is doing anything. I don't know what the regulators are doing. Because when IFRS 9 came, the regulators sent letters to all these TIEs and they were aware. But this time around, there was nothing coming from them. So what are the regulators doing so that these, especially firms that are being audited by the local ones can be aware? The big ones, the auditors push them, they have to see. But what about the local ones? That's my first question. Then the second question has to do with PIE in terms of the unit microfinance. You discover that unit microfinance is exempted from internal control financial reporting, but you discover that some of them have their turnover that are more than 30 billion. So what will such a unit microfinance do? Will they implement or will they not implement? Because they are exempted, but their turnover is more than 30 billion, which warrant them to implement again. Then what will not happen the following year where the turnover drops beyond 30 billion? So those are my two questions. Thank you so much.
Thank you very much. Let me call on Adiola Ribowale. Kindly unmute and ask your question. Please, you are not audible.
Sorry, I can't hear Adiola Adebowale well.
Am I loud and clear now?
No, you are not.
Okay.
Okay, let's call on Theophilus. Theophilus Ike, is it Ike now? Please kindly unmute Ike Shuku and ask your question.
Okay, good afternoon, sir. Really, I thank the presenter. My name is Theophilus Ike. Actually, I'm from ITDS, Edupedu Bagada district. Of course, the topic is thought-provoking. That's why I feel then I got a lot. My question is in regard to the COSO internal control framework, which the presenter also exhausts so much. There's an areas which I expected, especially we that is in practice, in issue of earning management and the income smoothing, which I believe most of those internal control measures has been elapsed where the management manipulates the earnings, which will beat the actual financial position of the reporting framework. Now, my question is this: in that regard, can we see any management or income smoothing rather as a kind of fraud perpetuated by the management in a positive mind, or can we see it as a kind of positive financial reporting system? Since the earning management cannot reflect the true financial position of the entity as at that moment, where the management differ some of the year's revenue to the prior year information. So that is where I want him to clear, but it's likely that the presentation it did not come from the route of the earning management and as well as income smoothing. So thank you, sir.
Thank you very much. Alex Ezomo. I'll take him and I'll take the last two people who start raising up their hands. They will now go to the chat room for questions. So, Alex Ezomo, please unmute and ask your question. Alex Ezomo. Okay, let's move on to Shehu Adebi. Please unmute and ask your question.
Thank you very much, sir. We really appreciate your lecture. My question is in area where we have a lot of deficiency in ICFR. Is it not enough to qualify a report?
Okay, Shehu Adebi. Please unmute and ask your question.
Good afternoon, Senator. Thank you, Mr. Jamiu.
Please, we can't hear you clearly. Please be audible.
I have two questions. One, what is the difference between ICFR implementation and ICFR audit? Then, my other question.
Sorry, I think he needs to come again. Unfortunately, I couldn't hear him very well.
Okay.
Is that Adeyemi?
No.
Or who is talking? Who is? Sheung. Please, can you increase the volume?
Okay. Can you hear me, sir?
Yes.
Okay. I want to make the difference between ICFR and the ICFR audit. That's not.
Sorry, I think at the secretariat, were you able to?
No, we can't pick it. I think it's from his end. So he will need to check his end and come back to us. So we can just tell who is the next? Okay, Olubenga Okunade. I think that will be the last one. Yes, Olubenga Okunade. Please unmute and ask your question.
All right, good morning. Good morning, sir. Thank you so much for the presentation. I really learned a lot. Let me first confirm if you can hear me loudly and clearly.
I can hear you.
All right, thank you, sir. So the question, I wouldn't know if you're able to answer it. I think you can. I'm in a country where I'm not in Nigeria. I'm in a country where ICFR is not a law for it to be implemented. And when internal auditors finish their report, I see that they advise with adjustments. And some of these adjustments are things internal auditors, which I do, have raised with them, but they refuse to implement. And the external auditor comes to pick it and then review. Now, over time, I've seen that because I've been following the FRAC ICFR in Nigeria, and I see that there is need for us, if we're able to implement it in our operations, the processes, it will save us a long way. Now, this is my question. Can this be implemented even when it is not a law in that country? Can I present it to the board as the chief internal auditor of the bank? Thank you.
Thank you very much. Okay, sir. I don't know if you want to take that or I should read the question in the chat room for you.
Sorry, maybe I should quickly take this.
Okay, sir. Yes, sir.
Then, so I think the first question came from Mr. Onaja, who said, is it possible to adopt this without using consultant? Because if you believe that the organization, you know it in and out, and you believe you can easily do it without using consultant, and the external auditor will come and audit it at the end of the day. It's possible. However, I doubt how easy it will be to do this. Because there are two things that are required to do this effectively well. The first one is training, extensive training. And the second one is experience. And experience means you've been involved. You've been involved in doing something similar. So if you have these two, then you can do it. But if you don't have the two, if all you have is the training, I bet you, even as you start doing it, you will come across some things that will never be taught in the training. So, unless you have somebody holding you to ensure who has done it, who has experience, that is the only way you can do it on your own. You can do it on your own when you have adequate training. Not this type. What I've done, just as described by Sheson, is just a tip of the iceberg, and it's not the type of training that you can use to do it. What I've done is kind of a high opener. and experience. So those are the two things I believe we will use to do it. And your question is similar to what my friend Olusegun Kwade asked, which is for members, especially in Kenya, who are working in business organizations and who are practitioners, auditors, how will they be able to do this? Of course, detailed training is the starting point. Detailed training is the starting point. So that is very important and it should be considered. Then after the detailed training, my advice is that there are certain things in this part of the world. I've seen it in many developed countries. Although I've seen few people here that would say, yes, I've done the training. I want to be involved in this thing. Don't worry, if you cannot pay me, don't worry. I will do it. I just want to get that the experience. I've seen that being done a lot in the developed world. So perhaps it's high time Nigeria started considering using that type of approach to acquire training, to acquire skill and experience. The question from my professional colleague, Pius Oni, he said the level of awareness is low on the part of those small companies, unlike what happened during the days of IFRS implementation in Nigeria and IFRS 9, IFRS 15. I agree with you. The level of awareness is very low. We've been having conversation with FRC on this. I've not really seen anything as well. Is FRC that will be able to do more on this? We are still having this discussion with them, and we hope they will be able to do this as soon as possible. Your second question is on microfinance banks that are unit microfinance banks, and they've been excluded specifically in that document issued by FRC. But they have revenue in excess of 80 billion. Unfortunately, FRC has excluded them. That's why the fact of course, they, even without them, if they have not been mentioned, they will do it because they are regulated. So they are PIA. But because FRC has excluded them, if you want them to take cognizance of this, perhaps one will need to bring this to the attention of FRC. But I think as it stands today, they've been excluded, and there is nothing that anybody can do about that. And again, you now ask the question for entities. I think that is a different question. It may not be a microfinance number. Because for it to be a PIA, one of the things FRC has used is if your revenue, your turnover, that is what they call it, is in excess of 30 billion. What if this year your revenue is not in excess, but next year, your turnover, next year your turnover is in excess? Does that mean you become a PIA next year? The answer is yes. What now happens if in another year your turnover falls below? Assuming you do not fall in the category of any other category that will have made you a PIA other than your turnover. So that means if turnover alone is being used, you may be a PIA this year if your turnover is in excess of 30. You may not be a PIA next year if your turnover is not in excess. I think that is one of the areas that we have advised FRC to issue guidelines on so that people will be guided. The question from Theophilus Ikechukwu on COSO framework, he was talking about any management, any smoothing. I think the issue here is this. I think many people, all of us, when we did our audits and assurance, we learned about this. And those who are in academics, they will know more about any management, any smoothing, because it's an academic topic. to which attention is always focused. But let me tell you something about what we call energy management. Even in the academics where they talk about this thing, they discuss it extensively. Sometimes they will tell you that energy management or energy smoking may not necessarily go against the law or regulation simply because they are leveraging on the loophole within what is permitted by the standard. Unfortunately, we are using IFRS, which is a principles-based accounting standard, unlike US GAAP, that is rules-based accounting standard. There is no way you can, if you do any management and you comply with IFRS, even though in academics they refer to it as any management, you comply with IFRS. To the extent that what you've done is not prohibited, it complies with IFRS, then you've not done anything wrong. You will still be seen as having ICFR because you are doing the review, and the auditor is equally coming to do the review. The review that your financial statement complies with what? With IFRS. As long as what has been done is permitted by IFRS, even though it's viewed by the academics as any management, it does not prevent your ICFR from being declared effective at the end of the day. The question from Alex is, okay, if you have more deficiency, why shouldn't you just qualify your report? And again, I'm wondering, I need to seek clarification. Which report? Is it the audit report or the limited assurance report that was issued by the auditor? Let me make clear. You know, I've said it, that before now, we've been doing audits. And some of those audit reports, we have clean reports, where you will say the financial statements show true and fair view. That does not mean the internal controls over financial reporting in that company is effective, right? For example, the way when it comes to control testing, what we do is that we have different significant classes of transactions that are tried to explain during the course of the presentation. Maybe if you have 10 different stocks, you may say in these 4 areas, you will rely on control. And you go ahead and perform what you test the design effectiveness, you test the operating effectiveness, you conclude it's effective to rely on control in those 4 areas. In these 6 remaining areas, you are not relying on control because experience has shown that control has failed. Or you have set up with the mindset of testing control. But during the process of testing design effectiveness and operating effectiveness, you discover that they are not effective, and you say you are not relying. Does that mean the audit report will be qualified? No. As long as you can extend substantive audit procedures that will give you sufficient and appropriate audit evidence, go ahead and perform those additional substantive procedures so that you'll be able to conclude at the end of the day and issue a clear report on the audit of the financial statement. But if what you are talking about is the limited assurance report that will be issued now, or that will be issued since 2023 on the listed companies, again, take note of the second to the last thing that you talked about, which is evaluating the deficiency. You have deficiency. The fact that you have the deficiency does not mean you have one or more deficiency may dovetail into what we call significant deficiency. The fact that you have significant deficiency does not mean you have material weakness. Until you have at least one material weakness, you can still conclude and issue a clean report that nothing has come to your attention that shows that the ICFR is not effective. But when you see the combination of deficiencies that in aggregate or individually has become what we call material weakness. And I've given you the 4 examples of indicators. You can have audit adjustment, but it may not be 1 or 2 audit adjustments that will lead to material weakness. That I need to let you know. But again, the judgment sometimes may be required at the end of the day in determining that 1 or 2 material, deficiency you have, whether it will just be a significant deficiency or it will move to what we call material weakness. Until you have material weakness, you cannot say the ICFR is not effective. But when the combination of material weakness and these deficiencies have become what we call material weakness, then you can no longer conclude that the ICFR is effective. Olubenga, you say you operate in a country where ICFR is not mandated by law, but your key question is, can it be done voluntarily? I think what management can do is that they can implement ICFR, but your auditor will not audit the process. It's not that you make the audit work seamless. Because in that country, I assume that it's not a requirement for the auditor to issue either integrated audit report or issue a limited report that we are meant to issue in Nigeria. What they are simply doing is not required in that country. But if you want to really reduce the amount of adjustment, if you want to make your financial reporting process very robust, and you want to make the job of auditor easy and straightforward, then you can implement it voluntarily. But the auditors will not report on it, and management will not report on it because it's not required by law or regulation in that country. So those are the my responses to the questions that have been asked so far.
Thank you very much, sir. Let's just quickly go to the chat room. We'll just might not be able to take all the questions there. We'll just take a few of it. Sadiat Abiola is asking, is there another framework for ICFR apart from COSO?
Is there another framework for ICFR other than COSO framework?
Yes. Other than COSO.
Yes, like I said, in the said guidance, they mentioned Canadian internal control framework there. They mention other ones. In fact, they indicate that there are other ones other than those ones they mentioned. So there are other ones other than the COSO framework. But like I've said, COSO framework is the one that we've seen many companies use.
Okay, sir. Then the second one, First Bank internal control issues in mind. What went wrong?
Sorry, say that again.
First Bank internal control issue in mind. What went wrong? This is Idsican.
Unfortunately, that is a specific question relating to a particular entity. I won't be able to answer that question.
Client privilege. Adewumi Austin is asking, now that we are in October and it's late to implement the ICFR for 2024 financial year, are there any penalties for an organization with over 30 billion that fails to implement ICFR for 2024?
Okay. Again, that question, I do not know yet. FRC was the one that issued the framework and said those companies to comply. But who is going to implement sanctions in the same FRC? I've not seen any publication as to what will happen to entities that fail to comply. It's only FRC that can say that, and I've not seen anything that has been published in that regard. But you know, I've always said it before, it's just like IFRS. The way we adopted IFRS, I've said it at different fora. the way we adopted IFRS in Nigeria is in a way and manner that no other country has done before. There's no such country in the world where virtually all entities are required to apply IFRS. Nigeria will be the first one. Again, what we've done with regards to ICFR, you heard when I mentioned that in US it was restricted to entities with securities that are publicly traded, which was what SEC did. But FRC said, no, this thing is too good to be used by listed companies alone. All other PIEs, other than those 7 that have been excluded, should do it. Definitely, we've done what, again, no other country has done before. And definitely, we will see experience what they have not experienced before. That is all I can say.
Okay, sir. So let me just take another one. What is the difference between ICFR implementation and ICFR audit? That is one. 2, we object.
Sorry, I didn't get that. The
What?
difference between ICFR
Implementation and ICFR audit.
Okay.
Then the second one is, will objectivity not come into play when using in-house staff to do ICFR?
Okay. Implementation and audit. The implementation is meant to be done by management of the entity. They will design, they will implement, and they will operate. Design, implement, operate, there are 3 different things or 3 different phases of that project. That is meant to be done by management. And that is where I've said, if the people within the organization, they have extensive detailed training and experience, they can design, implement, and operate. However, if they do not, they should consider using external consultants that have experience in this area. But when it comes to audit, it is the auditor who is auditing that organization that is going to do that. Is the auditor. Then your second question is, if an organization uses the staff of the entity to do the implementation, how objective would that be? Of course, it doesn't affect your objectivity because the external auditor will still audit what has been done. So if it has not been done correctly, given the knowledge of the external auditor, provided he has the knowledge, the experience, he should be able to uncover what has not been done correctly.
Okay, sir. Okay. I have 4 more questions here. Let me quickly take it so that we can. Can the external auditor rely on internal auditor's job to rely on the effectiveness of ICFR? Can external auditors rely on the internal auditor's job to rely on the effectiveness of ICFR?
Okay, a very good question. Even when it comes to the audit of financial statement, right? External auditors can rely on internal auditors, right? It's just that the level of the reliance may vary. The level of reliance may vary. But before you do that, there are certain procedures you need to perform, including the qualification, the experience, the knowledge, the reporting, who that internal auditors report to, and the detail of the work done. You need to perform certain procedures before you can do that. When it comes to ICFR as well, the same thing we apply. But again, experience is what we tell you whether you can rely on the work that has been done by internal auditors or not. But in any case, as an auditor, you need to have evidence of the work you perform. It could be that you are retesting what has been tested by management, by the internal auditor, because the internal auditor is working for the entity, is the one that has done it. The amount you will test, the level of testing, the sampling will all depend on the reliance we want to place on the work of the internal auditor.
Okay, sir. Elijah Olujide Odo is asking, what is the difference between management letter issued by the external auditors to the organization after the audit engagement and ICFR?
Sorry, can you repeat the question?
What is the difference between the management letter issued by external auditors to an organization after the audit engagement and ICFR?
Okay, thank you very much. Thank you, I understand the question well. Management letter, there are those, it contains weaknesses in the system, weaknesses in the accounting system, weaknesses in the ICA, in the internal control system that the auditors uncover during the course of the audit, which they feel need to be brought to the attention of management, right? We've been doing that before now. We will continue to do that, right? Now, in this era of ICFR, I talked about deficiency, significant deficiency, and material weaknesses. Material weaknesses means if you have one, you conclude that ICFR is not effective. But what if you have deficiencies or significant deficiencies but no material weakness, right? Those deficiencies and material weaknesses, so those deficiencies and significant deficiencies that have not migrated to material weakness, you still need to put them in management letter and communicate them to management, to those charged with governance. But once you have material weakness, you will conclude that at the end of the day that the ICFR is not effective, but you still need to communicate that very reason to management. So perhaps you may want to have a separate document for communicating material weakness that led to the ICFR not being effective from the other regular management letter. So that is the interaction between the two of them. We'll continue to issue management letter, but now we will have more things to include because if you have deficiency and significant deficiencies, we will put them more there. But when it comes to material weaknesses, you need to even communicate that to the highest level of governance, which is the board at the end of the day. Because that will even affect the reporting by them and by you as the auditor.
Okay, sir. So the last but not the least, can we accept a peer review of financial statement as a relevant control?
Can we accept
a peer review of financial statement as a relevant control?
Okay, when we say peer review, let's say company XYZ Limited is the one doing ICFR, right? And the XYZ Limited is the one that is supposed to design, implement, and operate ICFR. Is the staff of that company that is supposed to prepare the financial statement. Then they give to the auditors to audit. Who is doing peer review here? Is it that the company will take, before giving it to the auditor, we take it to another company to review for the company? Or who is doing the peer review?
I think the question is saying, okay, say for instance, CEO of related party, CFO of related party reviewing the effects prepared by another CFO of another entity in the same group.
Okay. Yeah, if the policy of the company allows that, I'm wondering because how will that not affect confidentiality of that entity? Because the CFO of that other entity is a third party, is having access to unauthorized information. But if that is the policy of that company around control, simply because there is no other person within, so be it. But again, you now need to prove how that person that you sent it to has good knowledge and understanding that can be evaluated, that person have the skill to review what has been said to that person.
Thank you very much, sir. We have more questions, but we'll find a way of sending it to you so that we can get the feedback and send to our members. So on this note, I want to call on the members to please appreciate our paper presenter by giving him another round of applause. He has done wonderfully well, and the paper is well presented. So I also call on the chairman, 37th Ben Lord Chairman, to please appreciate Mr. Jamiu Olakisan, our council member and our paper presenter for today.
Thank you, the General Secretary. Please let's appreciate our honorable paper presenter for today once again. Let's clap for him again, please. Thank you, sir. You've really done more than we expected because, in fact, I feel like the session should not come to an end, honestly speaking. A lot of questions still rolling in. That shows this topic, it's very, very important to every one of us because it's what is happening now. And you've been able to enlighten us more on who PIs are. So, and this is, the year is almost running to an end. That means companies have to get prepared, start doing this. And I could see many members asking if the district is going to have a full training on ICFR. Yeah, I think the technical committee are looking into that direction and we'll surely get back to you on that. Once again, thank you, sir, Mr. Jamiu Olakisan, a member of the ICAN Governing Council and also partner in the Ernst & Young. Thank you, sir. You have really made us so very proud. Thank you very, very much for this enlightening topic. On this note, we don't have anything to offer you, but we want to present this to you, this flag.
Okay.
Token of our way of saying appreciation to you for a job wonderfully done. Mr. Jamiu Olakisan FCA, Financial Reporting Group Attends and Young West Africa. Thank you so very much, but please, sir, we will surely come knocking on your door very soon. Thank you, sir. We appreciate you.
Thank you very much. Thank you all. Thank you, everyone. Bye.
Thank you, sir. So, distinguished professional colleagues, the next item on our agenda is recognition of new members. Recognition of new members. New members just joining us today. Please kindly signify by raising up your hand. Virtual raising up of hand. So that the chairman can give you a golden handshake, a virtual handshake. Please, just signify by raising up your hand.
Okay. All our newly joined members. Yeah, I can see Anthony. Okay. If you are a new member, you just joining us for the first time, kindly raise up your virtual hand. Let's welcome you properly. Let's appreciate you. Okay. I'm not seeing any hand up. Okay. Okay. Adekunle Agodiri. I'm sorry if I didn't pronounce that well. Adedayo Oluyomi, thank you for choosing the Peseta district. Adeyinka Aro, thank you. You are greatly appreciated. Then any other hand? Okay, I think that is all. So thank you for being, I know you'll be very glad that you took that bold decision. Olufemi Pelemo. Okay, Pelemo. Yeah, thank you for joining us. We appreciate you. This is just a tip of the iceberg. This is how we do it every month, where you surely get more added value to your knowledge. Thank you. Adiola Adeniran, we appreciate every one of you. Thank you so very much. And we hope to see you subsequent months. Thank you. God bless.
Thank you very much, 37th Bebe Lord Chairman. So on this note, we'll be taking news from the institute. But before then, we'll take news from the district. And the number one on the district news is we want to employ our members to please those of us that will still have an outstanding subscription to pay. Please, we want our members to please pay up their subscription, not only for the district, they should pay up for the institute too. District subscription is just 5K yearly, 5,000 yearly. I can proudly say that Idsican district still has the lowest subscription when it comes to district society of ICAN. So it's just 5,000 naira. Then another news is that we want the district account will be displayed on our screen now, so that for those that wants to pay now can just make the transfer immediately. Technical district account, please help us display it. Then for members that are not on Telegram, please find a way of sending a message to the secretariat. For those that have sent to the chat room, Zoom chat room will pick it. But for those that have not, please, you can just send to the secretariat. My number is always on any information displayed. Please, you can just send it to me so that we can add it to the Telegram. And another news is that in the month of November, we'll be having our 4th international symposium, which will be holding on the 15th and 16th of November. It will be a 2-day activity, and it will attract maximum credit hour, not the regular 2 unit credit hour we used to get. It's going to be a fee-paying symposium, and the fee will be just 10,000 naira. A token of 10,000 naira will be the fee. So more news on that would be sent as we draw closer. We'll be trying to publicize the international symposium. Then our end of year party will be coming December. We normally have a district end of year party where we come together every December. We bring family and friends to celebrate the year. And over the past year, it's been fun. And because this year is start Bebe, we should expect the unexpectable, because we have full Bebe activity lined up for us to enjoy. So the date for this end of year family forum will be communicated to members. So we would appreciate any financial support from members, because it's a district. We can't do it alone. We'll still fall back to members. So any financial support we would appreciate from members. Then the 4th news is our Western Zonal Conference. And luckily, as I was about to announce, we have the chairman, the conference chairman, working in person of our past chair, PC Abeli, Olusolama no more FCA. Don't worry, the camera will pick up. The camera will pick up. But the Western Zonal Conference will be held. Will be coming up February 5 to 8, 2025 at the Bamora Convention Center and Lagos Airport Hotel. And the theme of this conference will be Accounting Profession Beyond Numbers. Accounting Profession Beyond Numbers. Innovate to elevate professional excellence. I don't know if you can see the shirt the chairman is wearing. That's the shirt of the conference. It's going to be organized by your district, and you can't expect anything less. We can't expect anything less. The theme for this conference for physical participation will be 50,000 naira for members. For non-members, we have 60,000 naira. Virtual participants will be 30,000 naira. The young accountant, 30,000 naira. I want to believe that Ikeja and district is the host of this conference, and we expect all our members. Hello? Hello?
Okay, sorry for that. We can hear that the announcements are not audible. Can you hear us now? I think Bebelo GS has don't chop money. Can you hear us? Hello, can you hear me? Am I audible, please? Can you signify? Okay, there's every downpour here. I think that is contributory factor. Okay, I think I will start once again. Can I do your work for you? Okay, sorry. Payment of subscription, as earlier said by the GS. Okay, am I audible? Okay, you can. Can you hear me, please? Hello? Yes, okay, thank you. Okay, the first announcement is payment of subscription, both at the district and the institute level. The district is 5,000, just a token of 5,000 per annum. As you all know, we've been charging this 5,000 for close to 10 years. So please, we have a sizable number of our members who are yet to comply. Kindly do so. You will all agree with me that even the paper we presented today is more than 5,000. So with just a token of 5,000, you greatly benefit from the district. And also the institute subscription too. Please kindly be up to date. Then the institute has some benefits attributable to members in death benefits and benevolent funds. So in case you know any member that is late or has a medical issue, kindly contact us so that we can assist such member. Then an international symposium will be holding between 15th and 16th of November 2024. And it attracts MCPD maximum credit hours. Fee paying is 10,000 naira for the 2 days. It's an international symposium because we're going to bring in seasoned facilitators internationally, locally and international facilitators. So I know you surely be glad to be part of this fourth annual international symposium. Then our end of year family forum, which is start Bebe Law Day, is going to take place in December. The date and the venue will be communicated to you. Google form for registration will be posted on the Telegram and also sent to all registered mails. It's going to be as we all know, the economy is not too smiling. So we're going to subsidize this. We're going to charge a token as entrance fee per couple and individual. We will surely communicate details relating to this to you. as when the flyers are out. So please start preparing for Bebe-Lo dance, Bebe-Lo night, Bebe-Lo Gogwe, because this year we won't let any situation kill our spirits. We have to just make sure we keep socializing while we are also doing all the needful. Then the 19th Western Zonal Accountant Conference, PAB Ikeja 2025, we hold between 5th and 8th February 2025. The venue of this conference is at Lagos Airport Hotel Limited and Bamora Convention Center inside Sheraton. As you know, Bebe-Lo, Sheraton is not is not go area for somebody that is not Bebe-Lo. So that is why and your own district is going to be the host of this conference. And sitting beside me is our past chairman, the conference chairman, Mrs. Taibat Abenyoli Sholamalomo FCA, while your Bebe-Lo chairman will be the conference director. Then, so we'll be expecting a lot of Bebe-Los during this chairmanship year. The theme of the conference is Accounting Profession Beyond Numbers. Innovate to elevate professional excellence. Fee is 50,000 for physical members, then 60,000 for non-members. The audio is bad. Virtual is 30,000, physical attendance is young accountant is 30,000, and it attracts 18 units FCPD. Members who are not on the Telegram should please indicate, and also members who are not receiving mails from us. We have seen a lot of chats on the chat box. We have noted all this, and we will ensure you are all added to the Telegram. Then we also advise you to regularly update your members' profile with the district so that we can have your up-to-date information. Also call for articles in the district 2024-2025 newsletter publication on various topics relevant to our development as professional accountants. We also solicit for advert placements in the newsletter. So please, if you have any article, kindly send it to us. We'll be glad to receive such from you. Then we also implore our members to regularly visit the district social media on LinkedIn, Instagram, Twitter. Please visit and follow us. District cooperative. The district has a cooperative. Can you hear me? I think it's rain. District Cooperative Society, kindly contact as well as Atoyebi. His number has already been put on the chat box. Thank you. It is really raining here, so I presume that is why you are not hearing us very well. Thank you. Can you hear us? Hello? Yes, okay. Some people are saying yes. Thank you for that response. Okay, GS, over to you.
So, without wasting much of our time, I would like to call on the vice chairman of the. Okay.
Apologies, I omitted something. Please, we want to celebrate with our October celebrants because I know during the physical forum we celebrated with September celebrants and our very own past chairman in person of Mrs. Wendy Garuba Ayeni FCA. Today is her birthday. We celebrate with you and other members of the district who are October born. Kindly signify by raising up your hand and let us celebrate with you. If you are born in October, raise your hands up. Okay. All our celebrants, we wish you many more glorious years. We wish you many more glorious years. May you continue prospering. greater heights in Jesus' mighty name. Thank you. We celebrate you too.
Thank you very much, my chairman. I want to believe I'm audible now. So on this note, I would like to call on the vice chairman of the district, in person of Mr. Olutayo Sholanke, FCA, to please give us a vote of thanks to wrap up this members forum. Okay, please, the technical chairman, Mrs. Tina Babatope, you can unmute and talk now.
Okay,
You are not audible, ma'am.
You can't hear me. Can you hear me, please?
Yes.
Okay, I just quickly want to give response to Olamide and the said on the past year. He was asking for when they get the detailed training on ICFR, and I don't want to say that the technical committee will look into it, and we promise that we won't disappoint you. We will look at it and see what we will bring up next and communicate adequately to members. I just want to assure you that we have seen the task, we have read it, and the committee will deliberate it and come up with something good. Thank you.
Thank you, Technical Secretary Dickiness Tina Babatope, FCA. And on this note, I also want to appreciate you and your entire team for coming up with this kind of topic. And every month you've given us the best. Thank you.
My vice chairman, over to you, sir.
The 37th chairman of the Ikeja and District Society of ICAN, Olori Abioye Omobolanle Balogun, FCA, the Pepen Law Chairman, members of ESCO of Idsican, body of past chairmen and members of past chairmen here present, you are all our backbone. We recognize your presence either physically or virtually, because I have very close to my right one of you, the conference chairman, our erudite facilitator of today, Mr. Jamiu Olakisan, FCA, a partner at Aston and Young, and a member of the ICAN ESCO. Your well-researched lecture of today has gone very fine and down with us, and we want to reassure you that very, very shortly we are linking up with you so that you can give more of this to us. Coming back very soon. Thank you very much, the technical committee, for doing a marvelous job in bringing to us unfailing every month very good topics that enrich our knowledge. The technical committee of this district is doing wonderfully well. We thank you once again for your efforts. Members of staff, and especially photographer, we thank you. We thank every member of this district for always being there during this Bebenlo period and in the past. We thank you a million. God bless each and every one of us.
Thank you very much, our Vice Chairman. On this note, we'll be closing today's members forum by reciting the third stanza of our national anthem. I would like every one of us here to stand up and O God of all creation, grant peace and one request. Help us to build a nation where no man is oppressed, and so with peace and plenty, Nigeria may be blessed. ICAN anthem.
Let's go like and count of treasure, in triumph upon our way. Standing stronger in harmony, building our way together. Dreams of our founding fathers, we are striving to attain. Accounting values that we share, through all ages be sustained. Institutes of Chartered Accountants of Nigeria, no accuracy we cherish, we uphold your integrity.
National anthem.
Nigeria, we hail thee, our own native one, both tribe and country, in brotherhood we stand. Nigerians born and proud to serve our sovereign motherland. Our flag shall be our symbol, that truth and justice reign. It's all that to honor, and this we count as gain. And unto our children, a banner we will sing. Oh, God of all creation, that is our one request. Help us to build a nation where hope and is and so with peace and plenty, Nigeria may be blessed.
Thank you very much. So we've come to the end of today's members forum. So see you all next month by God's will. We can all unmute and say hi to our chairman.
Thank you, everyone, for being part of this glorious members forum. Past chairman, Abusi, past chairman, Ayuade, thank you, sir. Deaconess Babatope, thank you, as our technical secretary. Bolani, I just said. Olusegun Ajayi, Francis Akin, Dr. Taiwo Anthony Ogekibu, our past chairman, MC Idsican, Cheso Kwade, and his brother, Benga Kwade, thank you, all the way from Sierra Leone. Olatunde, Adesina Jamiu, Elijah Olujide Ojo, all the way from the United Kingdom, thank you. Samuel Akinrin, Kenneth Ukuma, Motulayo, thank you. Sabu Aloyinlapa, James Asa, Olutoyin Clement, Jamiu Olawi, sir, long time, thank you, sir. That's a lecturer back then in Wise. FA, yes, thank you, sir. Comfort Abba, Okwade Oyebukola, Oluyemisi, Bola Joko, Yadi, Abimbola, Amodu, Adeniyi Ombe, Farouk, Babatunde, Oluwafemi, Adebowale Dino, Christian Nwosu, Emmanuel Azan, Vera. Oh, our former auditor. Thank you, sir. My elder, Vera, Manufacturers Association of Nigeria, the lady that facilitated the All at Man. Thank you, we appreciate you. Gabriel Jimba, Adeniyi Ombe, Bukola, Olabisi Oguniyi, all the way from Canada. You can see it's an international district. Thank you, we appreciate you all. Razak Ajiboye, Olusola Bodede, Segun Olatunji, Daisy Ogunmokun, Christian, don't mind me, I'm an international lady. I don't know how to pronounce the local names. I don't know how to pronounce the local names. I don't have local dialect. Thank you. Let the Bebe Lord continue. I wish everyone a wonderful week ahead. God will be with us. We will meet next members forum. Thank you all and remain blessed. Okay. Today, live streaming. Thank you. I live stream at least. Any connection, no, your CV. Happy your day, so indicate no. Because I will pay over the 500 rather than people complaining. So I was saying.